Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, August 22nd, 2024. It's 10:43 a.m. as I'm starting this video, so we're a little over an hour into the trading day, and we'll keep this one relatively brief. I don't want to do one of those 40-plus minute videos right now. No need, just to give you a quick update on the equity markets, and so we'll keep it focused there. I'll follow up with trade ideas in a separate post, anything else. I replied to, there were a couple questions that I guess they were posted yesterday. I saw this morning, and I replied to one of them, which I'll talk on in a second, was about, the question about what I call escape velocity, which is if the indexes get close enough to the new high, previous all-time highs, they're probably going to just go on up through there and punch through. That's usually what tends to be the case. I'll talk on that real quick. Before that, in the other reply I made, somebody, hey, asked for an update. Can we get an update? There was no update to make in the stock market. The last 2 days we were flat. We closed slightly green yesterday and slightly red on Tuesday. So you can see we're still below the trend lines. It's the same reason I don't do updates on Saturday and markets are closed. There's never any updates, and if we don't, nothing's changed. So we broke down the other day. We went sideways. I mentioned we need to take out, which we haven't yet, 478.71 in QQQ. And I'm going to get to SPY. I just want to mention that divergence is, at least on the 5-minute, continuing to build. Those are your gaps, likely targets, tops, bottoms of gaps. I've boxed in there. So we're still waiting, still pending. We're below the trend lines. But we're pending that break of 478.71 on QQQ. And 557.75 on SPY, you can see here. So there's SPY below the uptrend lines and just moving, slogging around sideways. The divergences indicate that those levels will likely give way. 60-minute charts, here's what we look like. And on the futures, we do have, and have had, and this is the hourly chart. This is a 60-minute chart. We've got divergences building. So there was a breakdown of the trend line moving sideways, just, slightly higher, while the divergences continue to build there. And that's NQ, the NASDAQ futures, ES, or your S&P 500 futures. We're zoomed in a little bit here, a little tighter in time, but the same, there's your uptrend line. There's the breakdown of the primary trend lines right here. There's your divergence. So that would indicate SPY's closer to this previous high, but again, QQQ is, to me, it's all about QQQ, really. As far as both psychological significance to the market, but more so the mathematical weighting, it has the same top components of the S&P 500, just in a higher concentration. So kind of gives you some visibility to really the whole market, if you will, by watching those market leading stocks. Okay, let me get to those questions. That was in yesterday's post under the setups for the euro and the dollar. So this is a good one. Let me know, in your opinion, when the market has reached escape velocity. It doesn't look like there's a lot of buyers and even fewer sellers. Oh, absolutely. One thing I look at is volume. Here, I kind of going off on a tangent, but let me do that. Some of you might remember my low volume indicator. It's something I've used and shared many times over the years, for many, many years. Over time, my levels will change. I have an extreme yellow line there, and then that purple line, and it depends on market conditions. Again, that's why I have two levels. In certain market conditions, this does a trick. And again, something I've shared many times. You hit that. What it is, it shows when the market's going up, all of a sudden the volume, and by the way, my volume indicator, it's simple. I use a 10, it's just what seems to always work, a 10-period exponential moving average overlaid on the volume. Why did I do that? Because you can, any single day, it could be a holiday, abbreviated trading session, and you can have a spike down, or one day you can have a spike up in volume due to a Fed meeting. So the moving average helps smooth it out, so you can see the trend in volumes. And back here, right before this big drop, and this is the S&P. Remember, the drop was much larger in the NASDAQ. That's what we were shorting. I said we hit my extreme that we hadn't hit since back here, right before the top. And so that was very significant. So again, I say this, and I know I sound cynical, but the media are just I don't know. I see things different. They couldn't pin a cause on it, and then they said it was the unwind of the yen carry trade is what they finally ended up kind of coming to consensus why we just had such a big drop that came out of quote unquote nowhere. Again, it was technically there was more technical evidence than I'd seen in decades for a drop. And again, it's a drop that as powerful as it was, I think it was just the first wave down. And again, whether we make a marginal new high or not, I think there was a lot of, I know there was technical events building for many months, but this was one of them. And now here's what I wanted to get at. Look what the 10-day EMA did here. I think you can see it here. Again, remember, we hadn't hit that level. The last time we hit it was right before the top, and when the S&P peaked. And remember, the Nasdaq actually peaked right then. It was in late October, I think it was. No, November. November. It was in November when that signal fired back then. Here, I have it on QQQ as well. I just wanted to show you that, yes, absolutely, and that's a great comment because I have been monitoring that, and it's one of the many things I watch is volume. And here it is on QQQ. Forget about all these other lines, annotation. And again, it's something that I did highlight for you back here recently as a red flag. And you can see the last time that QQQ hit my red line here, which I have not tweaked, modified, that was created back in 2019. If I update it, maybe I did in July. Looks like July 18th. I take that back. But that was right around the top. Either way, you can see that was it right there. Was the last time volume fell to this level until here. So again, this has been a pretty darn reliable indicator. We hit not the top level. The top level was good for, and typically is for little corrections and pullback in an uptrend. But when you hit this extreme, what it shows you is a market's going up on fumes. And this volume is a big part of technical analysis you should incorporate in your trading. And so I just want to point out, as that subscriber did, that yeah, we've been drifting up on fumes. What it is, I believe short sellers have left the building. You know, made the case to go long. I'm going to talk about that real quick. Looked for, and that was the other part of that question. Let me get back to that post. Okay, so my reply is, yeah, I will do. Escape velocity will likely be accomplished if QQQ moves above that uppermost resistance level that I've shared on my daily charts around 487, as that is the only half decent resistance I see between that level. As the only half decent resistance level I see between that and the early July all-time high is the top of this July 16th at 17 gap. Although I suspect a solid pop above 487 will be the catalyst for a final short covering rally that could pop the Qs to new high. Let me show you the charts here. Okay, so what I just said in there, and go back to a daily. This is that level right there. 486.79 is where I have the line, and it is this high here. You have a big gap here, so it defines the at least that candle we gap down there. Yeah, it is roughly the and so again, that's where I could put it. If you look at the top of that candle, then you'd have the line right about what is that, about 488.63. So maybe call it 488 in there if you want to look at that, because traders will. They're going to look at this gap. But that's it. So if you pop this much around, like call it 487, 488, the only resistance I see on the daily, traders will look at, there's a gap backfill to be made. But again, it's like that kind of that black hole analogy I used, or a magnet. You guys have ever played around with magnets and you put one near the other one? I know you flip it over with polarity when they push apart, but then when you have them on the same, together, you try to hold them, and if you put them close enough, they pull and they snap together, no matter how hard you try to keep them an inch or so apart from each other. I think you know what I'm talking. If you've done that, you know what I'm talking about. And that's kind of what I see there. So we're not there yet. So when we bottomed here on the 5th of July, if you recall, my targets were to be determined. And in that video here, let's see, I did a video that day. Let me find it. Okay, right here. So we covered that morning, as I stated, full reversal, close out all shorts, all swing accounts, everything, go long, hard long. And however, so I'm going to talk on a little bit about that real quick. The difference between a hard out and a hard in, or a soft in or a soft out, meaning all in or scale in. And so in that video right here, you can go to it. It's at the 24-minute mark. I laid out and I used the word, quote, very likely, a very likely target right here, 473.56, and I'm leaning towards that target. Now, did I start scaling out? Absolutely. I'm going to talk on that. I didn't hold out up until that point and stay full hard long, aggressively long to that point. I started scaling out earlier for the reasons I stated, and I'm going to talk a little bit about that again. It's a difference between a hard bottom and a hard top. So let me go back to that. So that's 473.56. As I said, a likely target back then, and where are we at now? We are above that level. That's it right there, 473.85. That's the same level right there. We came up pretty fast at that time. What had us coming taking a little longer to get there, and coming in with the trend line. Either way, that's the price level, and it was a good resistance level. And look, we blew right on through it. And that's also hey, I wouldn't be adding any more shorts here, nor have I above that level. I would not add. I'm sitting tight for now, but I'm not giving it much more rope, because that's, like I said, if we pop up through here, it's probably only going to be a marginal new high, but it could be more. Either way, it wouldn't be fun to ride out, especially if you're already going underwater on the current position like I am right now. I'm red on it. If it's marginal, it could be another 5% pop to get up there, or it could be, 6% marginal new high. That's the nature of each of these new highs. This one from the last high was about 3.5%. Okay, so let's talk about that. So this part's important. So tops in the market or in a stock, they're usually a process. You probably heard that saying, topping is a process, not an event. However, it can be an event, and there was an event, and what you can look for are events. The event was that bearish engulfing candle I highlighted that was put in on the day it was put in on July 11th. And we even had a sell signal right before that on the 50 or 60-minute chart, that little minor trend line break there. It's not shown here on the daily. So that actually was an event. It happened. It's what I call, one of my favorite patterns to trade. I'm going to talk on the failure rate in 1 second. But it's super simple, because you look for it at the end of a prolonged uptrend, which certainly qualifies for it. This is from the uptrend really began in October 2022. So it certainly meets that criteria, extended. Obviously, or at least I will say it should be, for me it's obvious, you want to see everything else I've covered. I could sit here right now for 5 minutes and tell you extreme breadth deterioration, negative divergences, overbought conditions, sentiment indicators, blah, 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 1,000,001 other things. But technically, that's a single event right there, a bullish engulfing candle. And yes, there was one there and one there. And I think that was the last two highlighted, and they didn't play out. Does that mean that bullish engulfing candles are no longer effective potential topping 6? No. Again, as I've said, there's not any single indicator or sell signal or anything that's 100% effective. If it was, we would all be using it and everybody would be rich. All right. So, you can only take the shots as they come. As of now, I'm still going off that, thesis, if you will, that it was it marked a top, a significant reversal. You can call it what you want. You did get out of it like I said, it was 16% in the regular session, more than that in the after hours in the pre-market drop off the highs. Okay, so that was an event. Bottoms, to me, they can be processes too, but they're often events. This was an event. I was very clear that morning. The event was the 200s were hit. My price targets on the futures, T5 I think it was, on the NASDAQ 100 futures. Where's that chart right there? NQ, T6. T6 was hit to the button. Very good support. There were 101 reasons, including but not limited to, especially the 200 days being hit, the fact that it was going to solidify the rate cut, which it did, and that was a narrative. So again, that's all goes back to that video from the 5th. It all was laid out there. Everything that you'd start hearing on TV, oh yeah, now the Fed's definitely going to cut, and the economy's weak and all that. And see, in that video I mentioned, told you a preferred target initially. I said, look, guys, I'm just giving you today's, we're here, that any or all these targets in reverse are potential bounce targets. Early on, I said I think I was leaning towards T4 on the initial post that morning, and then the video I came out and gave you the higher target I just covered on QQQ as a likely target. And look, here's where we're at now. We're back to T2. You can see here on the futures, T2 was again laid out in advance right here. It was his first target hit here. We had a bounce. Then we went down, we hit T4. We gamed this bounce. And when we got here, if you go back to those posts on the 8th, I expected this bounce, this one, to be bigger than that last one we gamed, and that's what we got. So I will say it is the persistent buying in this bounce. Again, it's we just evidenced with the lack of volume. It's as much of a lack of sellers. There's certainly some buyers coming in, but you're just not seeing. It seems like the short sellers have left the building now. And either way, this is that trend line. Remember, these are the uptrend lines, a steep uptrend line. I've given you comparable uptrend lines in recent videos on many of the market-leading stocks, as well as a lot of semis. And I think when collectively these break, that should do the trick. But look, if we push up much higher, this is really, you can see that's comparable to the level I just gave you on QQQ, where we probably hit that escape velocity. Because again, there's really, when you look at the NASDAQ futures, which we're looking at here, that's the last resistance level I have. It was my first downside target, and I think it's a significant, it's the last resistance level. And so if we do that, we go up, and rarely you can see a double top high. You can see a reversal that happens just before the highs. In fact, that's what happened back, if you go back to, let's turn off all the lines here. You remember when the NASDAQ peaked again? It was in November right there of late November 2021. Let's take a look at that top and see what happened. They came close, very close. So it is possible. There was the high right there. It was, that was got to be above a 76.8 retracement. There was the first leg down. We zigzagged down a little, and they came all the way back, and then they reversed. So, like I said, every top is different, every bottom is different, but this one was an event. Like I said, a singular event for the reasons stated at the time. The 200 days being hit, price targets being hit, which are support levels. You can see it there on QQQ too. Take it across. Nice support. Everything else, that was an event. This is what I'm getting at, has been a process. So as I stated, not a hard all-in, not a hard reversal. If it did, I would have been in pain reversing too early right now. It's been a scale in and kind of hold off, wait and see, and now it'll be a scale out for me if we go up much more above those levels that we're talking about. All right, we're at the 18-minute mark. I'm just going to go through the charts real quick and say, so there's QQQ above the trend line. I'm sorry, below the trend line. Kind of going sideways the last few days. Slightly up yesterday, slightly down the day before. We're slightly green. No, this is showing green. The futures are red at the same point in time. So we're flat here on QQQ's flat, and the futures are slightly negative right now, the NQ futures. And there's that resistance. But I'm going to go through the market leaders. So Apple broke down below the trend line, but it's going sideways. So far, no sellers there. And it's, I'll give it props. It's above this. This is your last reaction high, and it's above that by a hair right now. So not looking good. Again, let me be clear. I wouldn't be shorting now. You'd want to see us start to reverse, get back below this level, get back below on QQQ. I'd want to see it come back down. Really nice to see it get back below 473.85 and the trend line. But let me go to the other components here. NVIDIA, again, they broke down. The sellers should have stepped in. They haven't yet. And we're drifting up again on fumes. You can see the volume just really tapering off here. So we're at resistance right now in NVIDIA. below the trend line, below that trend line support. Microsoft broke down, but also going sideways. It's just kind of weird, kind of icky, if you will, price action. And maybe it's everybody waiting for Jackson Hole. I don't know. It's like I said, it's an unusual market, but when you look at other things like, for example, NVIDIA had, let me go to QQQ real quick. I just saw something on Microsoft. I want to look at QQQ. There it is. Okay, QQQ. I have to leave the lines on. I'm just going to show you something I mentioned down here before is the PPO. You can see I have two lines here, yellow and red, and they help to delineate trends. They're below the zero line. So as you can see here, forget about the blue line. It's the PPO line. I wouldn't look at the white line, the 9 EMA, because it's the last of the two to cross. And this is a trend indicator here. And we're ever so slightly starting to punch above it. And again, that's why I think we're very close to that point of escape velocity. You can see bear trend. You know, this. I covered this recently too. You back tested right there. There's the red line right there. That's why I have two lines, red and yellow. It's pretty much we're below there. We're either going to get rejected or we're going to go on up through here. And then who knows, there could be more. When you're up here, when this line is clearly above, you're in a bull trend. You can see that bull trend you want to be buying. When you cross below, you're in correction mode or bear trend. See, bear back here. These were all the big drops and the three major legs down in the last bear market right there, the last downtrend. That one, and then this final one there. And then you got above it here, and you stayed above it. So that's there. I want to show it to you on a few other stocks here. Let's just go through the market leaders. Apple's bullish. The line I have is at about this level here, but Apple's sliced through it, so I don't put a lot of credence into that one there, a lot of weighting, if you will. NVIDIA's punched through. Sometimes you can look at it if you just study it. It's the zero line right there that delineates the trends, but here's where my purple line is. So NVIDIA is back above it, so I'm going to give it points. So again, it's why right now, if I came back from a vacation today and I didn't have anything, I wouldn't be going long here, but I wouldn't be adding any shorts. I would hold off to see a lot of these trend indicators flip back bearish. Microsoft is still clearly Microsoft, and it's probably a great time, guys, by the way, to trade individual stocks and sectors more than the market. That I can tell you, and I'm moving towards that. I like the semis right now, prefer the semis over any other sector for shorts. And financials might be getting there soon. But let me just show you here. Microsoft, that trend indicator right there. And you can put another line. You could put one right here, right? You can see where it's the last couple times it went down to, and we're back testing that from below. But still well below the trend line here. But also, like I said, and the reason for reversing lately, a lot of these stocks hit or slightly undercut the 200 days and they're back above them. So you want to really increase the odds. We're going a lot lower. Again, I've said it repeatedly lately. The recent lows are going to be a big level to watch. I know there's a lot of lines here on this chart, but the recent lows on a lot of these stocks, that was price support as well. You could take it all the way across there. It was resistance. This is a big level. In fact, I should have a price alert. I mean, I have that level marked up on my chart already, but I'm going to set an alert just to remind me when Microsoft takes that out. It's really good price support. I'll probably clean this chart up. Let's go to the next one here. Alphabet, beautiful uptrend line. Look at that. In the 200 days, this is just textbook. So we need to, again, if we take out the lows in Alphabet and Microsoft, we take out the 200s. And that usually that usually doesn't happen in a bull trend. You come in and you check them, it's off to the races. So I think this is, like I said, what I said the day of August 5th. I believe we're trading a reflexive bounce, the Pavlov's dogs, meaning dip buyers. Both humans and machines, algos, are conditioned to buy pullbacks to the 200 in an uptrend. Hard stop. That's it. Now, the $1 million question is, sooner or later, that doesn't work. And there's one last check, and then they break. And so that's kind of what I'm been positioning for and looking for here. Amazon was way below, like I said, but came back up and rallied into resistance right now. Backfilled that gap. Gaps are typically backfilled. It's ideally in a trend, in a bull trend, when you break out, when your market's going up or stock is going up, it's healthy and common to see gaps backfilled before you resume the trend. I say they don't like to leave unfinished business. So in this case, there was a big old gap. Amazon's backfilled it. It's recovered the 200-day moving averages, so really has no business now getting back below them. And again, I look at this collectively. If Amazon dips below them and then the rest of the stocks go up, the FANGs or Mag 7, Amazon will probably follow because it's indexed heavily with them. But those are the things I'm looking for there. Meta unusually strong, but big negative divergence. And let me look at a few more. Okay, I realized shortcoming in this software. I had paused it somewhere along the line. When I went to hit resume, it actually I toggled it back and forth. I didn't realize I was paused. If I didn't cover this already, I don't think it was recorded. This is gold. This is a daily chart. There's a big bearish rising wedge. There's negative divergence. It is at support. I don't have a position in gold right now. If I had to pick one of the two, probably short, but I just don't have the confidence in it. It's just coming off highs. It's been stair-stepping higher in this range here, making slightly higher highs, but each high, I've covered this, has been a divergent high on the 60-minute chart, and that sent it down. Then you get these divergent lows, and we go long. We've traded it back here. I was trading it pretty actively, and with near impunity. That was four targets hit, 1, 2, 3, 4, and reverse there, and I gave you 3 long side targets. But that's been the pattern in gold, and just put in this divergent high. And as I showed you today, the euro just broke down and the dollar broke out, and that should give a headwind to gold. In other words, probably bring it down lower. There's an uptrend line right there, which is a potential target, as well as those levels I just showed you on the daily chart. And if it gets really ugly, again, if this is repetitive, I think the video was paused when I said it. I'd really like to see gold down here around 211.50, the bottom of this trading range right here, that support level. There's a potential uptrend line that I extended from way back when that comes in, but and if it gets really ugly, there was a trading range here and a breakout above it. So this, if we get here and the charts confirm, I'll probably go long. But one of the things, and again, I don't know if it was recorded when I said this, I think there's a lot of retail investors in gold now, the same type of folks that are buying Bitcoin and NVIDIA and risk-on assets too. And if there is another leg down the market, in other words, if the stock market, QQQ, and those market leaders take out the recent lows that we put in a couple weeks ago, they'll have taken out the 200s, and you'll get the next leg down to my deeper price targets. You'll probably see some forced margin calls selling in gold. So I would like to see that and then be a buyer of gold, either down here or here. We'll see. The charts are dynamic, and so is my analysis, so we'll see. And if it wants to continue inching on up like this, just recognize that pattern of these. Each of these have been little divergent highs on the 60-minute charts, followed by pullbacks. That's been the MO lately. But it is wedging higher with this more powerful and significant divergence on the daily chart. What I mean by that, typically that would indicate a bigger drop here on the daily chart. 60-minute divergences are good for short-term swing trades, like we swing traded here. T1, 2, 3, 4, reverse T3, 1, 2, 3, up. And now boom on the way down. Okay, we're right at the 29-minute mark. Good place for me to stop. Let me stop there. You have the levels to watch on the market. Powell talks tomorrow. I think it's at 10 a.m. at Jackson Hole. But as I said earlier, I believe I covered it. If not, I said in the post, it's not about only what Powell says or what it's about the other central banks as well. And so, because the dollar is in a vacuum, the dollar doesn't just go up and down. The dollar index is weighted with the euro as a top component at 62% or whatever it is. The yen at 23. something like that. So those two alone make up almost all of the dollar index, and they determine where the dollar goes. So in other words, Powell can be and will be probably dovish at the next meeting. We know we're going to get at least a quarter point cut in September, maybe a 50 basis point cut, which would imply weakness in the dollar. But how much of that has already been priced in to the drop in the dollar? That's $1 million question now. So you can have the ECB or the BOJ, come out as more hawkish or dovish, and then that can really impact the dollar as well. So hopefully that makes sense. So don't go off the charts, not off what you think Powell's going to do, right, or what Powell says. You gotta it's collectively what all the other central banks do as well, which determines where the dollar goes. Okay, this has been Randy Finney with Right Side of the Chart. Have a great day.